Today, I'm going to reveal 3 stocks that I'm buying on Trading 212 this month. A couple of these stocks might seem a bit obvious, but maybe you haven't fully considered why you might want to actually be buying these. So with that said, let's grab a coffee and get right into it. If you want to sign up to Trading 212, then you can use my referral link in the video description. This normally gives you and I both a free share whenever you sign up and deposit the minimum value of £1. However, Trading 212 had stopped taking new customers for a while due to being overwhelmed with new users. But they have a waiting list you could join, so you could follow the link, sign up, and see if it lets you make an account. And you wouldn't want to miss out on your free share. On another note, if you want to get started investing right away, then Free Trade is another really good app that's another great option. They have a similar free sign-up incentive with a free stock, just like Trading 212. My Free Trade referral link is also in the video description. But remember, when you sign up, you need to make that minimum deposit of £1 to make sure you get your free stock. Before I show you what stocks I'm buying right now, I just want to make it absolutely clear that none of this video is financial advice and it's purely for entertainment purposes only. Okay, so the first stock that I'm buying is Alphabet, the parent company of Google. And I know, you're probably like, come on mate, that's not interesting. But actually, I think that too many people buy this stock blindly or just completely skip over it thinking it's just a search engine. However, that's just not true. Google is actually an online advertising giant. 90% of Google's revenue comes from online ads. So this is where the real value is. And let's not forget, Google owns YouTube. Think about how many ads you're bombarded with as you search around the platform and watch videos here. Google is getting paid for every single one of those. YouTube is already massive, but I think in future it's just going to grow bigger and bigger as the new wave of new media continues to dominate. New media will continue to take the place of traditional media like TV and print, so that's things like newspapers and magazines. For example, think about how often you read a newspaper or even watch something on TV these days, compared to how often you stream a video on YouTube or another streaming service like Netflix. Traditional media is probably dead, and it's only a matter of time until this new media wave completely takes over. I think it's certainly true that younger users are far more likely to adopt a habit of consuming media through streaming on websites like YouTube, rather than tuning in to watch CSI on Channel 6 at 9 PM. And let's face it, when was the last time you saw a 16-year-old pick up a newspaper? So in summary, I think the Alphabet stock is very fairly priced right now. They have a strong balance sheet and have shown consistent growth. I'm going to be buying in now, and I think I would continue to as long as the share price was below $2,400. The next stock I'm buying right now is Facebook. It's a similar story to Alphabet in that they make most of their money from advertising. 90% of Facebook's revenue also comes from advertising. Many people think that the Facebook app or website is the product, but that's not strictly true. In fact, we, the users of the platform, are the product. Facebook sells us to the advertisers that are using their platform. Another fact that we shouldn't forget is that Facebook isn't just the website that your mum and maybe your gran use. They also own apps like Instagram and WhatsApp, which also have massive user bases in their own right. These platforms mean that Facebook has their fingers in all pies when it comes to advertising and pushing products in front of the eyes of consumers of all ages and groups. Facebook and Instagram both also have their own video sharing aspect. These draw users in and provide yet another outlet for ads to be delivered. This comes back to the point that I made earlier about new media and what is now becoming the most important space for advertising. I think it's really hard to argue with that point, and that's why I'm buying the stock right now. I think Facebook is a great buy for anything under $300, but possibly even anything under $330 for a longer term outlook. The final stock that I'm buying right now might feel like a little bit of an oddball, especially given the fact that those first 2 stocks are 2 massive American online advertising platforms. So this last stock that I'm thinking of buying is Tesco. Tesco is a major supermarket here in the UK and is very different to big tech like Google and Facebook. Looking at Tesco, we can see this dip here. You might be thinking, what happened? Why does it seem so cheap? Well, hold up there, cowboy. There was actually a stock consolidation and a large dividend payout. So that's what's caused this dip in the share price. Tesco recently declared a special dividend of 51p per share, following their divestment of their Malay and Thai operations. This was paid out on the 15th of February and went in conjunction with a stock consolidation of 15 for 19. I think Tesco stock is priced well and is a stable, dominating supermarket here in the UK with 27% of market share. This is substantially more than its closest rivals in Sainsbury's and Asda, who both have about 15% market share. Tesco also receives substantial revenue from the sale of petrol, at around 11% of the company's global revenue. Tesco isn't going anywhere, and they represent a good opportunity to park some money in these somewhat uncertain times. The stock has historically proven itself to be very stable, just like many other supermarkets. These stocks tend to move with inflation, so I should not see any devaluation of my savings if I leave some of it in Tesco stock. If you've enjoyed this video or found it interesting, then please hit the like button. And it's also greatly appreciated if you could subscribe. Only around 8% of you watching right now are actually subscribed, so it would be great to really boost this number up. Because there are plenty more videos to come, thanks for watching.